Bitcoin nears $100,000, the three macro forces behind this rally and how to position now. That's the title of the video, and I want to talk to you about the fact that Bitcoin is knocking on the door of $100,000. And no, this isn't just hype or halving buzz, it's macro. I'm Funcho Ajibade, founder of Prime Block Capital, and in this video, I'm breaking down the three key macroeconomic forces behind Bitcoin's explosive move and exactly how investors should respond right now. So let's start with the M2 money supply, which tracks the amount of money circulating in the economy, and it's surging again. The Fed has quietly increased liquidity to stabilize the bond market, and that cash is flooding into assets like Bitcoin. When M2 expands, capital needs a home, and increasingly it's flowing into non-sovereign scarce assets like Bitcoin. If we look back historically, M2 jumps in 2020 and 2021, they helped push Bitcoin to its first $60,000 peak. And we're seeing a similar pattern now. And Bitcoin is acting as a high beta beneficiary of that liquidity. Okay, so let's take a look at Bitcoin here. Obviously, we've had a massive push, and that downward sloping trend line has finally been broken through, and we've even broken through that resistance that was sat at $99,000. What I would love to see from here is that we can start to build a base and flip that resistance into support and start attacking and breaking through that $100,000 mark before then pushing for new all-time highs. You can also see on the RSIs at the bottom of your screen there that we've had another crossover and it's starting to tick up to the upside. So things are looking fantastic here for Bitcoin. I think the next major leg up is round the corner. Of course, we can still hit our head off of the resistance there and head back down to that support number one level before then making the next attempt to go past that psychological $100,000 price point. But I think we're not far away from seeing something very, very explosive soon. So, bond market liquidity. Institutions are moving. What is that second key driver? It's liquidity in the US bond market. Over $1 trillion in new capital has entered the system, and bond market participants, including hedge funds and institutions, are rotating risk capital into assets like Bitcoin. Why? Because bond yields have stagnated, and with the Fed holding rates steady, institutions are looking for asymmetric upside. Now, Bitcoin, with growing ETF access and global acceptance, is becoming part of the default risk on portfolio for these guys. Okay, now let's talk about the Fed holding rates steady. Risk on is ignited. It's that simple. The third macro factor is Jerome Powell's recent Fed decision. Rates are unchanged. Now, why does that matter? Because it removes the fear of tightening. And when the Fed pauses, historically, risk assets pump, just like they did in 2019 and 2020. Now, this signals to the market it's safe to reallocate capital, and that's exactly what's happening. The Bitcoin rally is not retail FOMO, it's macro positioning. So how should you be positioning yourself now? Strategy for long term, okay? So what do you do as Bitcoin nears $100,000? Here's what we advise our clients at Prime Block Capital. Number one, do not chase green candles. Wait for consolidations or support tests. The $90,000 to $94,000 zone could act as a reload range. Number two, use dollar cost averaging. Even at these levels, DCA helps you manage entry timing. Small, consistent entries are better than emotional lumps that you live to regret. Next is keep dry powder. Keep a portion of your capital in stable coins or cash to take advantage of 20 to 30% pullbacks. And I promise you, they will come. They always do. Now, the other thing that you need to do is watch macro signals. M2, Fed policy, bond flows. These are what move Bitcoin now, not just halving hype or Twitter narratives. You need to think bigger, okay? Liquidity is what drives the markets. So what's next? Is $100,000 just the beginning? Yes, $100,000 is a big psychological milestone, but based on the strength of institutional inflows, macro liquidity, and also global economic positioning, this could just be the start. Okay, if M2 continues expanding and the Fed holds or cuts rates, Bitcoin is going to explode, 120, 150 in no time or higher before a major macro reversal takes place. But it requires discipline, not hype chasing. Okay, so what should you be doing right now? You want to join the movement, not the noise. If you're serious about long-term wealth building in crypto, not trading, not hype, join our free WhatsApp Crypto Insights Hub. Every day we break down macro trends, smart accumulation plays, portfolio strategies, all tailored for serious investors. The link is in the description below. Thanks for tuning in. Please make sure you like the video. It helps and goes a long way for us. Subscribe, hit that notification bell. I'll catch you in the next video and stay sharp out there, guys.